We now have a representative from the industry joining us. Subba Rao, Group CFO of GMR Infrastructure, joins us on the phone line to share his views. We will also be joined by Mr. Miyajiwala of Voltas. Mr. Miyajiwala and Mr. Subba Rao, thank you very much for joining us. Well, let me begin with you, Mr. Miyajiwala, since you have both consumer durables as well as some capital goods. All right, let's start with Mr. Subba Rao. We just have a problem. Mr. Subba Rao, how has the capital goods growth been? The numbers that we have got from the data are very good at 12.5% on a fairly strong base. Are the order books growing substantially on a month-on-month or quarter-on-quarter basis?
Yeah, a lot of new projects are being undertaken, which have the implication here. So the numbers show that what is happening on the ground. A lot of capital has been raised in the recent past, and people are dusting their capex plans, which have been held back for quite some time. And this is what is leading to the fresh orders on the capital goods. This shows the recovery. It reinforces the recovery that has been happening. And once the capital has been raised, so the debt also would be raised, and which leads to the all-round growth in the capital goods. So this reaffirms what has been happening on the ground level.
Mr. Subba Rao, of course, you have exposure to power, roads, even airport traffic, and a fair bit of perspective at that. Now, you've been a firm believer in looking at broad trends, 3 or 4 month trends. It's been 4 months that you've seen a nice month-on-month uptake. You've seen year-on-year figures coming in between that 8 to 11% odd range. Do you sense that it's now firmly intact? And across the various sectors that you have exposure to, where do you see the most traction?
See, overall, let us be cautious. All these numbers, they reinforce the feel-good factor. They strengthen our optimism. But all this is coming from the capital flows from the West. And the West still is not in the sound health. And this is happening because of the dollar carry that has been flowing a lot of money into the country. And once there is any problem on the western side, I think there would be some kind of disturbance here. Yes, we need to be cautious and we need to be optimistic simultaneously. And there would be widespread growth because the feel-good factor is continuously getting boosted with the availability of more and more capital. That's what all that is happening. And the uncertainty clouds are just getting blown away. But while we need to be optimistic, we also need to be cautious. We should not go out of the way to do the things now at this juncture.
Mr. Subba Rao, okay, we have got Mr. Miyajiwala also with us. The technical problem is sorted out. Mr. Miyajiwala, since you handle 2 different sectors, consumer durables as well as capital goods, give us an idea. Can you say with confidence that month on month you are seeing greater sales offtake in your capital goods segment as well? One can see it in consumer durables, of course.
As far as the consumer durables are concerned, there is a definite trend of increasing demand, and it is very discernible. As far as capital goods are concerned, it is a mixed bag at the moment. In some of the areas, although there are improvements, they are not very significant. And the inquiry levels, of course, are there, but actual orders being given in and the deliveries being taken is not in line with what our expectations were. So there is no secular trend yet.
All right, some flashes coming in on your screen. An in-principle approval of 10,000 crores, which IFCL will lend to NHAI. On that subject, Mr. Subba Rao, just taking a break from IIP for a little bit, there were some rumors today that maybe toll levy will now be reduced and there will be an absolute reworking on that front. Do you have any clarity and have you been given any perspective by the government on this reworking of toll prices?
Yeah, no, I wouldn't like to comment on this till the policy is actually announced by the government. But our belief is that any revision, if it happens, it would not impact the projects that have been executed already. I don't think we should have any concern on this.
Okay. This appears to be IIFCL underwriting bonds issued by NHAI. Well, this looks to be a little superfluous. Nobody doubted the ability of NHAI to repay. So it's guaranteeing an NHAI borrowing program. I don't think that ever was an issue. Private sector perhaps require merited guarantees in certain places. But guaranteeing
sovereign
an NHAI program,
sovereign
guaranteeing another sovereign, I don't know if that really makes any difference, Mr. Subba Rao. Would it make really much of a difference if IIFCL were to guarantee an NHAI borrowing?
I don't think NHA itself is a sovereign guarantee. I feel guaranteeing these bonds, again, I don't see any value addition here, any additional security. And NHA itself has thousands of crores of toll collection, which it can securitize on a AAA guarantee basis and raise a lot of money. It has a huge borrowing ability.
In any case, the fact that they have set aside, I think 10,000 crores was the number for road projects, should mean that most of the road project companies, we should pull up their stocks, that entire gamut of companies, whether it is a Gammon or whether it is a IRB infrastructure, all the road contractors are definitely going to see some kind of a leg up the stocks. Likewise, perhaps even cement companies, anybody who benefits by quick road construction, we should be pulling up their stocks for you. Mr. Miyajiwala, you said that you're not able to discern a secular trend in capital good demand for capital goods. Are you saying that you don't hear of people expanding, putting their capex plans back on the drawing board? No such instances. Month on month, are you seeing an improvement in your capital goods offtake?
Yeah, the reason why I said there is no secular trend discernible is because in some months there have been good demand and there have been good number of inquiries, but the following month again it dips. So right now I think all the people who have plans for investment in their capital facilities, they are being a little cautious, and only if they see a continuous uptick in the economy, I think they will finally decide to go ahead and invest their money.
You know, it's a strong 22% growth even in consumer durables. It's an impressive record that consumer durables has shown. Do you think, Mr. Miyajiwala, this will continue even after the Diwali month? I mean, do you think October, November also will show decent trends in consumer durables?
My personal feeling is that yes, because in the first quarter, one did not see much of increase in demand. The second quarter was a little better than that. And thereafter, right from beginning of the year, month on month, the demand has been increasing. So there is a clear trend visible at the moment.
Final question to you then, Mr. Subba Rao. There have been a fair bit of capital flows coming in. You mentioned it as well. Is financial closure happening a lot easier? And I know you don't want to comment on this road policy, but if on new projects toll prices do eventually go down, will it in a perverse sort of way benefit traffic flow for a lot of your roads?
No, I don't think if the toll tariffs go down, I think there would be compensatory impact somewhere. Either the concession period would be increased or some other compensation would be available for the profitability of the project, the sustainability, viability of the project cannot go down. That is one fundamental truth that everyone of us has to believe in the industry. Hence, this will not have any impact.
All right, Mr. Subba Rao, Mr. Miyajiwala, thank you very much for sparing time for us. So that's